The media have a really tough time telling the truth about what's going on in the economy. We all know, for example, that they consistently hype the Dow as a leading indicator of where the economy is going, even though it's notoriously unreliable. But here's a piece of the story that they should be telling you, but won't. Here's a graph that shows you for the 30 stocks in the Dow, their weights based on price in blue, which is the way the Dow Jones Industrial Average is calculated and reported. Looks pretty balanced. Some bigger, some smaller, but there don't seem to be any biases in the portfolio. But now look at the red bars. That's the weighting based on market capitalization. And that, my friends, proves that the game is rigged. That even among the biggest companies, there's a huge concentration of wealth at the top. So let's have a little fun with this. Two key points. First, note that the price weighting creates distortions unrelated to actual economic size. In a price-weighted index, for example, each company's influence is determined solely by the nominal stock price, not by its total value. For example, Goldman Sachs has one of the highest share prices in the Dow, over $400, so it carries the largest weight, about 9.8%, in the index, despite having a market cap of only $232 billion. By contrast, NVIDIA Corporation has a market cap of around $4.4 trillion, almost 20 times larger, but only a 2.4% weight in the actual index because its share price is lower. The inference you can make here is that the Dow overemphasizes companies with high share prices and underrepresents those with lower share prices, regardless of their economic footprint. So, why does that matter? Because it distorts what people think the market is doing. For example, when the news headlines say that Dow Jones fell 300 points, that move may have been driven disproportionately by one or two high-priced stocks. Meanwhile, the mega-cap companies like Apple or NVIDIA, which actually represent vastly more economic value, might have barely moved. As a result, though, public and media narratives about the market can be misleading, overstating the impact of some companies and ignoring others. So you can see if a small handful of high-priced stocks drive most of the movement, then interpreting the Dow being down 3% as the economy is in trouble is weak logic, understating or overstating the real health of corporate America. We'll get to what that real health is in a moment, but just note that the Dow is a lying indicator, not leading, not lagging, but lying. The other point that I want to show you is this, that wealth concentration is much more skewed in the real economy than in the Dow's structure. Now, a lot of people talk about wealth concentration in the economy as a bad thing, and then the wealthy just jerk on the media to shut that shit down. But the reality is that, as they say, folks, shit rolls downhill, or if you prefer, is dropped from an F-35, because it's even worse at the top of the corporate food chain. As you can see, the wealth in the Dow is much more concentrated among a few companies, and the rest, well, they get the scraps. So the question is, why does this matter? The reason is simple. The concentration of wealth doesn't happen in a vacuum. Whether you're talking about trickle-down nonsense for households or a lack of antitrust enforcement for businesses, understand that this doesn't only hurt the 99% of the population whose portfolios aren't jammed with FANG stocks. It hurts even more the 99.999% of businesses that don't have access to the capital this represents. And that's why the economy is in such great peril. Not just because if the AI boom fails to pay off big, and there's almost no chance it will pay off that big, and as a result, all the money put over into AI is going to get vaporized, but because the capital and the loans that traditionally fund startups and growth stage businesses is virtually gone. As a result, the entrepreneur class is almost non-existent, taking with it the aspirations of a middle class and a generation. But hey, stock market's up this week, so everything must be okay. Go Birds!